Well, hello everyone. Welcome to Trading. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab. We are in a brand new week in the markets. Markets are hitting all-time highs, and so if you're not high on life, you may want to make yourself a coffee and join us here every Monday and Friday, where we have a lot of fun and where we link arms and we are together figuring out what to do with what's happening in the markets, whether it's good, bad, or ugly, right? One of the things about learning how to trade, and particularly if you choose to include options, is that there are opportunities for us, whether the market is going up as it is now, whether it's going sideways as it has done in the past, or even when it or a particular stock are going down. And so, that's what we're up to today. We're going to review a couple of trades that we didn't review on Friday because we have agreed as a group that we are not going to go with the ostrich approach to managing our portfolio. We are not going with the head in the sand approach. And it is so tempting to look at the things that are going right and to just kind of ignore the things that are not going so right. But I heard a CEO of an investment company on a podcast one day, and the interviewer said, if you had one piece of advice, what would it be? And he said, when you're wrong, admit it. And the faster you admit it, the better. So there you go. So we're going to admit our mistakes and celebrate our wins. And, most of our focus today is going to be on placing new trades. And as always, I tend to have more that I'd like to talk about than we can possibly cover in 45 minutes, but I'm going to give it my best shot. So I just want to start also by thanking all of you who helped bring this class to life. So like to Janelle and Will and Josh and Sharon and Debbie and Ron and Austin and Paul and Loves to Travel and Derek. Thank you all for being part of this. I really appreciate it. We also have Mike Fairborn, who's a friend and a fellow coach. He's a great guy, teaches a lot of awesome classes throughout the week. So if you have questions, don't hesitate to ask. Between Mike and I, we should have questions for you. So Will is teasing me about Canadian flags, and tomorrow I am covering for Mr. James Boyd in his 11 o'clock Investing Master Series. And I'm going to share a little secret with you, about Canadian flags. So you'll have to come tomorrow to kind of catch that. But yeah, feel free to join me for that one. So let's get right down to business. If you're not following Mike and I on X, you're missing out. So not only do we post lots of stuff about the markets, but, occasionally we give you a window into our personal lives. Mike is a very outdoor oriented guy, and he posted a beautiful shot of some, from his bike on the weekend. So you want to check that out at Barb Armstrong CS, at Mike Fairborn CS. If you have never been, just a sec. There should be, I skipped over something here. Okay, here. Know that options carry a high level of risk. We do a lot of options trading in this intermediate level class, and options aren't suitable for all investors. You also have to apply for option trading privileges with Schwab. I tell you that because if you're practicing in paper money, which is, where we do our example trades in this class, you may feel that you've mastered it and finally want to place a trade in your live account and then it won't go in. It's because you have to apply for option trading privileges. So I just fair warning on that. Also know that there is a difference between paper money and a live account, even though they look like, smell like, kind of feel the same. But short option positions will never be assigned early. And we're going to have a little chit chat about that in our class today because we have a short put vertical gone wrong. And we're going to look at that and discuss what that might mean if it were in a live account. Now, if you've never been to a live event, you're going to want to get yourself, if you live in Texas, I hope you're planning to come and join us. We are going to have like hundreds and hundreds. We'll probably have close to 1,000 people joining us. We're flying people in from all over the country, from the East Coast, from Chicago. People are coming in from Salt Lake City, from all over, to feed both your body and your mind on Saturday at the Gaylord Texan. It's not too late to register. So be there, be square. We'll cover your parking. We'll have the coffee on. We'll provide a breakfast. We'll provide a lunch. We'll provide a really fantastic reception at the end of the day. And we are going to look at markets from global to individual stocks. So, Janelle, yay. She's going to be there on Saturday. And so is Chris. And, Ask a Coach says all his exes are living in Texas. Well, I won't tell them that you're coming if you don't. So there you are. So, and please come up and introduce yourself if you come to this class or come to any of our classes, because Ben and I would love to meet you. I think Kevin Horner is going to be there as well. So so I'm excited. I'm getting myself on a jet plane. Okay, so market overview, that is done brilliantly at the Market Open in Trader Talks. And so if you want a complex or a detailed market overview, please check that out. It is archived. We are going to take less than a minute on that and spend the majority of our time on new example trades and then managing our existing positions. And you see that these get equal billing, even though, we don't necessarily spend equal time on them, but understanding when to place a trade is only part of the skill set that we need. So managing existing trades is an important component as well. So we're going to spend some time on that. Okay, if you're new to this class, feel free to type a greeting into the chat so that we can welcome you. Somebody's asking when we're coming to Minneapolis. I don't recall if we went to Minneapolis this year or not. I know we won't be in Minneapolis prior to the end of this year, so you may have to get on a plane. But we do events. We're doing an event in Chicago at the beginning of October, and Kevin and I and Ben Watson will all be at that event as well. So you may want to come and join us in Chicago. When I lived in Michigan, I travel all over the country to go to these things because they just, filled my cup. I learned so much. Okay, so here's our S&P 500, hitting a new all-time high today. Okay. Hitting a new all-time high. We started, we've got about 32,000 in this account, 31.7. We started the year at 25,000. If you are new to this class, and our rule is we don't want to invest more than 5,000 if we're buying stock in any one position. We don't want to risk more than say $500 to $550-ish in that range. Okay. So, but the S&P 500 hitting a new all-time high today. How about the NASDAQ? Oh, yep, new all-time high. How about the Russell? Okay, so maybe not a new all-time high, but is it a year-to-date high? Yep. And is it, a 5-year high? Not quite, but if you had a good arm, you could throw and hit it from there. It is football season now. So I did watch the second half of the Clemson game, came down to the last second of the game. Very exciting. Okay. How's the Dow? Well, that hit a new all-time high on Friday. Today, hovering within a hair of it. And then what about the VIX? Oops. It's down 15.4. And this is a 5-year weekly chart. Let's come to a year-to-date chart. So this is kind of at the low end of the range of where this index has been, hanging out for, this year. So not too shabby. So that indicates that we've got, a fair amount of confidence, right, in the market. So Jackson's saying, hey, come to Columbus. We have in the past done events in Ohio, but not lately. So you may have to go to Detroit or get on a plane and get yourself to New York or DC. So You got to go where the going gets, right? Okay, let's start by looking at Take Two Interactive, TTWO. So TTWO, if you're not familiar with this company, if you come to the Analyze tab, it's in the communication sector. So what do? Entertainment. They develop, publish, and market interactive entertainment solutions for consumers worldwide. So a lot of gaming, Grand Theft Auto, Midnight Club. I'm not a gamer. I think life is a game. Based in New York, and incorporated in 1993. So, it's been around for, over 2.5 decades, right? Approaching, 30 years. Well, I guess it is 30 years, isn't it? Over 30 years, 32 years. So, and if we scroll down, you can look at the fundamentals and all of that great stuff as well. But if we're looking at just trying to take advantage of this trend, and if we're playing a bit of I Spy with my little eye, what kind of pattern do we see on the charts? And let's hope my drawing tool is behaving a little better than it was on Friday. I see kind of this inverted, double bottom type pattern, right? And then it broke out. So we had a breakout here, and then it kind of came back and retested, hung out at this support level. And so, we could do a couple of things. And in this class, we do a lot of short put verticals where, if we did a short put vertical at, say, maybe 240, could we do a 240, 235? And so from here, if you say, well, this looks interesting, what we could do a long call vertical if we think it's going to continue to go up. We could also, because we have a lot of stock, we have a lot of cash sitting in our account, 23,000 of our 31.8 is sitting in cash. Could we buy some shares? You might say, well, Barb, we can't buy very many because, it's a $250 stock. Well, we could buy $5,000 worth and we could put a target on it. And what might our target be? Well, we could say, well, if you see this double bottom, a technician might choose to measure from the bottom of this pattern around this 220 level to this 243 and say, well, I think it's going to make about this range is about $23. So I'm going to take and add $23 and make it 266. So that could be a target. We could also use the Fibonacci's, and I don't tend to talk about those a lot in this class, but I am covering for James tomorrow, James Fibonacci Boyd. And so, could we, sorry, this is a little high. We started where it broke out and then pull down to where it broke out from. And we could use the 161 extension as a target. And that would say, well, that would be around 255, 59. And you could use either one. There's no right or wrong. There's just different ways of, trying to come up with a target. So if we said, okay, we're going to use this 255, 59 as our target. And then where might we put an exit? Oh, it looks like this started from here. Okay, so that's not right. Let me just do this again. We're starting from here and drawing down to here. Okay, 258.34. Okay. So we're going to get rid of that just to eliminate clutter on the chart. Now, where might we put a stop? Well, we might say, well, one of the reasons that we're interested in placing this trade is because we saw this double bottom pattern where it broke out and came back and retested. So we see this 243.28 as a support level. And so could we come and take that 243.28 and then maybe put a stop 2 or 3% below that? If we use 3%, our stop would be at 235.98. So now we have a target and an exit. Next question is, how many shares of stock could we buy? Yeah, so, and sometimes people will ask this question like, $5,000, Barb, you started with 25 grand. So like that's 20% of your total portfolio. Are you crazy? Well, yeah, like I'm trying to be crazy like a fox. Like, and so what do I mean by that? Well, if you are, you do have a smaller account, and you'll notice we're risking $500 on a trade. So we're up to $500, sometimes $550-ish. And from our starting portfolio, that represents 2% of our account value. Now, if you have $1 million account, you might say, there's no way I'm putting 20% of my portfolio in one basket, in one stock. And you might say, like, I want that number to be 5%. And I don't want to risk more than 1% or half of 1% or a third of 1% on any one position. So it just depends on, your account size, your tolerance for risk. When I started trading, I picked a physical number that I wanted to risk. Like, so say that number was $500, and that might be a tenth of what I'd risk now, but I was learning. So I considered that kind of the cost of my education if a trade went wrong, but and I'm not saying that those were my numbers, but at one point I kind of had to get away from paper money and just make it real. And so as you're learning, also, you may want to increase your risk. Okay. So, but the problem is if you make your number something like $50 or $100, there are a lot of trades you cannot do. Okay. So anyway, I'm getting off my pedestal now. So we've got 5,000 that we can invest. We're going to divide that by, I'm going to call this $249. I'm rounding up. So we can buy 20 shares. Okay, so we're going to buy 20 shares. We're going to come to our trade tab. We are going to right click. We are going to buy custom with an OCO bracket, because we are going to put in both a target and a stop. And the first thing I'm going to do is make this number 20 so I don't forget. Okay. So it's 20 shares. I'm going to make these good till canceled. Our target is 258.34. And our exit is 235.98. Now I'm going to let the system do the calculating for me. So how much could we make? Well, almost $10 a share, right? Like 248 to 258. So that would be, at $10 a share, just shy of $200. How much could we lose? Well, we could lose $13 a share. That's what this is saying our risk is. Minus 13 plus 940 minus 1297. So why don't I make the stop tighter? Well, I certainly could, but then your risk of being stopped out goes up. So you want to not risk blowing up your account, but at 12, let's call it $13 times 13. Oh, sorry, let's put this in. We're going to put this in a stock with a target. And then we're going to do a long, well, let me just see. I don't know if we can do a long call. So we'll put this in. There we go. But if I multiply this times $13, if we were to lose $13, would be out 261. Now, when we put a stop in, does that guarantee we're going to get out at a particular price? No, if the stock gaps up or gaps down, we could be out at a different price than the price we put in as our target or the price we put in as our limit. Okay. Okay. So there's our first one. Now, if we wanted to compare this to a long call, like we'd want to come out to at least October. And we can't afford to do the in the money call. Why is that? Well, we can't afford to do the in the money call. Well, and actually, October's only 32 days, and this might take some time. Like our target is, oh, let me come up here. Our target is at 258.34. So it could hit it this week, but it could take, it could take 2 weeks or 3 weeks, and it might never get there. So here's our stock target, 258.34. And we've invested, like we have now committed $5,000 to this. Oops. Sorry, let me just, stock target. It's Monday, 258. So, if we want to give ourselves more time, we're at the point where we're almost cutting it close. Now, if we're doing a swing trade, different story. But this isn't a swing trade where we're expecting something to hit necessarily in 4 or 5 days. So if we came out, November isn't posted yet, if then our choice is either October or December. And with December, we'd have to go way out of the money here to be able to afford it. And so we either, why am I fussing about this? Like, why do I care about the time? Because time is going to be ticking away. And if we, the value of this option goes down by 12 cents a day, that's not nothing. Where if we came out here, it would be eroded to the tune of 7 cents a day. 5 cents a day is kind of a big whoop. It's 1% of this option value, each and every day. And so this is why, you want to, take time into account. Because you may think this is nothing, but this is 12 cents a day on a $4 option versus 7 cents a day on a $5 option. And so if we were to do this, actually, let's go ahead. Let's go, this is out of the money. Why are we choosing an out of the money strike? Because that's all we can afford. We can't afford to do an at the money strike. That's $1,600, $1,700. And how much could we lose? We could lose all of it. So December options will become available, but not until the September options have expired. So they just aren't available yet, and that's why. Okay, so let's go ahead and we're going to do this and we're going to compare it. We're going to buy custom with an OCO bracket. And we're risking $530. We're going to put in an exit if it loses half its value. So 270. And our target is going to be the same target as for the stock. And just so we can compare and contrast them. And so we're going to come to our disappearing, reappearing sprocket and say, hey, if and when Take-Two Interactive gets to 258.34 at or above 258.34. $258.34. There we go. And then you may want to either come down here and just make sure it says greater than or equal. And we have a second chance to confirm when we come to confirm and send. Now, call me crazy, but some people will read these out loud. I'm buying a call. And I always say, I'm buying a call because I'm bullish, right? Right. And it's actually a 40-cent spread on an option that's, $4. So that's not too bad. And so here's, we want to get out of this when it goes to 258.34 or above. We want to sell if it loses half its value. Okay, and we're going to put this into our long call group, and this is a fib target. So it's based on the Fibonacci's, and we're going to compare to the stock position. And some people love it when I do these comparisons. Others find it frustrating. They're saying, like, just like pick the best one. But, you're not learning if we do it that way. Like it, and we do place lots of just individual trades, but I have found this to be really interesting. Now, sometimes it can be a little humbling. So if we want to go to the humbling, can we talk about Boeing? Now, this should either strike confidence or fear into your heart. But when you look at your current positions, and we have about 13 or 14 positions on right now, actually call it 15 positions with the 2 we just placed. But if it says this little ITM, it means we're in the money. And we are hurting, down 750. Well, how can we be down 750 when we don't want to lose more than 500? Because we did 2 trades. And so we position size each to risk up to 250. Now, our vertical here is at 470. And so what's our risk? If we come and look at Boeing, so here's a trade gone wrong. And let's get in kind of up close and personal. So on this day here, we saw something that had been uptrending. It was above the previous high. And we did this short put vertical, and we did 2, I think it was 2 different time frames. And, then it came down and kind of hesitated at what we thought might become a new support level, and then it tanked. Well, today it's at this support level. And we're seeing this Harami pattern, which could be indicating a time change, but both of these, actually the difference on these 2, one was $5 wide and one was $2.50 wide. But this expires Friday. So you could say, well, we have this Harami pattern, that this pattern, if it closes like this today, doesn't require confirmation. It's an indication that things are changing. So we could wait until Wednesday for this and see if it just comes up. But some people will have a rule that no matter what is happening, by the Monday before expiration, you're out. And so what we're going to do is close out. Well, this was 467 a second ago. We're going to close these out, but what's interesting to me is that it is like way below both strikes, and yet we're still not at quite max loss, which is kind of interesting, isn't it? So in order to close them out, and the other thing is, we're in paper money, so we're never going to be assigned early, but we're 4 days away from expiration. Here's our short strike at 2:30. And at 2:30 with a short strike, the buyer is the one in charge. And what we have said by selling that short strike is that we're willing to buy this stock at $230 a share. That's one contract is 23,000. And between these 2, we have 3 contracts. So if these were exercised and this were a live account, you could expect a knock on your door. Well, it's probably going to be an email that says, excuse me, hello, you don't have enough money in your account. Please deposit enough money to cover this. Now, if all 3 were exercised, and it depends on your broker, so I'm not saying Schwab would necessarily do this, but they might say, hey, I see that this person has this long put in here. I'm going to go ahead and exercise it. And it not only protects the client, it protects the firm. Because if this expires worthless, now you've bought these shares and you don't have the right to sell them. Like, so if we buy it, if we're forced to buy at 230, we can sell it 230, 225. And so that's how we've managed our risk. Now, if these go into expiration and we do nothing, both legs would be exercised and we'd have our max loss. But if we can get out now and save a little bit, even though it's only, $35 here, and, this one is actually over. Like, the most we could actually lose is 250, but they're saying, hey, this is so bad. We want more than the max loss. So we're going to exit this one. And what we have to do first is come to Boeing, these trades, and just cancel these orders. Okay. Or you could cancel and replace them. And then we're going to come back to our monitor tab and say, okay, this one, if we can get out for 472, we're going to create that closing order and just admit that this is one of those that did not work out. And we're locking in the loss, but if we were in a live account, we're preventing ourselves from the headache. Now, what if you're in your live account and these two contracts get assigned, you open your account tomorrow morning and you are in the hole by like $26,000? What would you do? So okay, this is really unusual. So this is saying in the money. I don't know why that closed out that way. But I will close out the other one. But what you can do is exercise your right. So this is the one we sold. You can exercise your right. And how would you do that? And I'm going to show you just by coming here to a long call. So if I come to my long call and I want to exit, there's this thing that says exercise. And exercise says, like, if I've sold it and with a long call, or a long put, I want to exercise my right to then sell those shares that were put to me. And then that will balance your account. Okay. Does that make sense? Yeah. And like Riceberg is saying, like, if you have this happen and you're new and you're kind of like, I'm not freaking out, but, Barb told me what to do, but I don't quite remember. If this were to happen, you are welcome to call the trade desk. And Andy's asking the question, if you got assigned on the short position, will Schwab exercise your long position before the expiration? I would call the trade desk and ask them that question, because I'm not sure. Some brokers might, like, let's say it was UNH or some other company that, these shares, like, when you look at Electronic Arts, it's not a cheap stock. Well, this is Electronic Arts. What we're closing out is Boeing. But, it's over $200. Let's say it was Microsoft, which is a $500 stock. And, you have a small account and all of a sudden you have $50,000 worth of shares assigned to you. It's possible that some brokers, if they saw the other side, might exercise, but call and find out. I am not sure. But this is a great question, to call and ask, so that if this happens, but don't count on someone else cleaning up your mess. I'm showing you how to do it. There isn't a fee to exercise. Great question. Yes, like when I started, I used to have the trade desk on speed dial. Like, I really did. And one of the things that I remember calling and asking them about, so like we've just placed 2 trades and one of them was on take 2. And you might say, well, like, I know how much money I'd make if it goes up because, like, I want to get out at this price and it's the stock, so this is what it is. But how much could I make on this call? And so to do this, you go to the trade tab. And this is just an estimating tool. So you come to Theo, Price, and Mark, and we're going back to our Take Two trade. And we placed this trade in December because the November monthlies aren't available. And you'll see now that we have different columns here. We have a Theo Price column, and we have a price column. So this is the current price, and this is the price it would be if the price changed. So the first thing you do is you come to reset. Okay. And so what is our target on this? Our target is 258. So if we say, okay, if this went up by about $9.50 a share, $9.50 a share, would that get me to it would get me to 258.97. So it would have hit my target and issued an order to sell. Now, if it went up and did that today, this would be worth about 778. Okay. So, but let's say it took 2 weeks to do that. So come the 29th of September, it's come up and hit that target. And what did we pay for this? We paid $5.20. So it would be at about 651. So we'd be up about $1.30. Okay. So if I take that $1.30, and how much was I risking? I was risking $5.20, and I could lose the entire amount, even though I have a stop in place. So that would be about a 25% return. Now, if we make the 200, the $10 a share on our $249, like it's actually $9 and something, like if we made $9.30 on the stock divided by, our price to get in was about $249, we'd be up about 3.7%. So the percentage return is much higher, but the risk of losing the entire amount you've invested is higher with the call. So there's no free lunch, right? You have to make an informed decision on kind of what you're doing and why you're doing it. So we got out of our trades on Boeing. I just want to look at two other trades, like super quick. One, and the reason for looking at it isn't because it requires a lot of management. We placed this trade here, two trades, a short put vertical and a long call vertical that we want to compare and contrast. And then this thing had the nerve to come back and retest this diagonal resistance line. Looks like it is acting as support. It's bouncing again today. If you didn't put these trades in with us on the 8th, you might get in like for a more attractive price even now than what we did on the 8th, if you wanted to follow along in paper money and do a short put vertical. And then with a long call vertical, you probably wouldn't be doing 235 and 240. You might be doing 230 and 235. So that one, we're just going to exercise some patience. And the same with ANET. Now, let me bring up ANET, Arista Networks. So we have a short put vertical on this at 135. So we went below this support level at 135 and we have a short put vertical on at 145 and 140. And so we're currently underwater. But what are we seeing on this trade today? We're seeing a Harami pattern at a support level. So are we panicking? No. Could we technically be assigned? Could we end up owning $14,000 worth of ANET? We could. Because it could be assigned at any time, regardless of how much it's in the money. But when we look at this trade, it's saying we're down by $55, but we've gained 65 of that back. And it doesn't, the expiration on this is October 17th. So we have 30 days to recover. And even though it's below that 145 strike, we're not even halfway to max loss. And so we just have to be patient. But again, if you miss that class, and you may say, yeah, I'm glad I missed it, because, like, could one, if you were looking at this for the first time, say, I'm going to go and see if I could do a short put vertical down here at 135. Well, that could be a potential trade setup. But for those of us who already have this position on the books, we're just going to take one hand, take the other hand, and sit on them and let time decay and the momentum of both the market and this stock hopefully do its work. Okay. Let's look at Siri, because I kind of thought it would be neat, because we did the first one on Friday, to kind of look at, we're seeing a lot of Harami patterns on the chart, at a support level. And this is a stock that's in the $20 range. So is this something where we could do this idea of, a swing trade? Like, here's the previous high up here around 24.50 or, 24.80, but could we put in a target around this 24.50 mark and buy 100 shares? And you might say 24.50, like, that's not very much, but 24.50. And if we got in at 23.44, we'd be making how much? $1.06. Well, but that's, and you may say, well, like, I'm sorry, but if you're expecting me to be impressed with the opportunity to make, like, if we did 200 shares to make $200, well, like, that's a base hit. And when we divide that by the cost of entry at 23.44 a share, that's 4.5%. Like, that's not too shabby. And so we're going to go ahead and do that and say, okay, we've had this diagonal resistance breakout, and you may say, well, when did you draw that line? And maybe we want to move this line. And if we move it to here, and I extend it, I wonder if I can activate. It's still a breakout and retest. And Harami pattern today, which if you're new to candlesticks and new to all of this pattern does not require confirmation. Now, having said that, this is a live candle, so it could change by the end of the day. We're assuming it's going to stay in this kind of ballpark. Okay. But I've done a bunch of short videos on candlestick patterns, and they're in both the Trade Management mini session series and in the Getting Started with Technical Analysis series. So we're going to place a target at 24.50. Where might we put a stop? Well, we might say, hey, recent low on Friday, 23.22. So we're going to go 3% below that. 23.22 times 0.97. That's 22.52 is going to be our stop. So, how much are we risking? Well, under $100, under $1 a share. Yeah. So Greg is asking if I'm a Blue Jays fan. I used to be a Blue Jays fan when I lived in Toronto. My son-in-law grew up in LA and is a big Dodgers fan. So I'm now cheering for the Dodgers. Yeah. Yeah. So there we go. But if I were back in Toronto, like, I'm a fickle lover, right? Like, you got to love the one you're with. When I'm in Toronto, I'd go to a Jays game, no problem. Okay. So let's go ahead and place this trade. Oh, mine. Yep. Okay, so we're going to buy custom with an OCO bracket. How much? 200 shares. What's our target? 24.50. What's our exit? 23.22. And again, are these like for sure? Like, are you guaranteed you're going to get out right at 24.50? No. Are you guaranteed you're going to get out at 22.52? You are not. If it gaps up or down, you could get out at a different price than that. How much are we investing? We're investing $4,688. That's less than our $5,000. And, we're risking about $200 given our stop if we get out in that neighborhood. So we're meeting our trade, our position sizing requirements. So there's another stock with a target. And could we have done could we have done a long call with this? Yes, and it's in our snack bracket, like even in November, and this one has a November option, so go figure. These are 5 cents apart, 131 to 136. We don't have time to put that trade on today, but maybe we'll look at that on Wednesday. Guys, have a really great day. Up next is trading. I think it's called technical trading. James Boyd typically teaches it. Connie's covering for him today. So technical indicators. So stick around. Lots of great stuff still to come. Make sure you subscribe to the channel if you haven't done that already. Please hit the like button. It lets me know you found this valuable, and it helps other people find this content. And then don't forget to follow us in the land of X. Have a really awesome rest of your day, and we'll see you tomorrow for Getting Started with Technical Analysis. Bye for now.